bit. Let me shift the focus from Europe and the Fed to earnings. Global IT major Cognizant came out with third quarter numbers that were far ahead of street estimates and their peers. Revenues rose 7.8% quarter on quarter to $1.6 billion, whereas profits shot up 9%. The company has also upped its FY11 guidance. For more now on Cognizant's view of the world, we're joined by Frank D Souza, the President and CEO of Cognizant. Frank, thank you very much for joining me. You've upped your FY12 revenue to $6.11 billion versus the earlier stated $6.06 billion. Considering the world of uncertainty we seem to be facing, I must start by asking you what makes you so confident, because today, from where we sit, we could be potentially facing a very disorderly default on behalf of Greece.
Thanks a lot for having me, and we had a very, very strong Q3, and we upped our guidance for the full year of 2011, as you pointed out. And it's exactly because of that volatility that you pointed out that our clients are turning to us to help them take advantage of that volatility. Our clients are looking at the volatile environment and saying, this is an opportunity to invest. This is an opportunity for us to take advantage of the volatility and the opportunities that are presented through the volatile environment. And Cognizant is a firm that can give our clients the opportunity to innovate and to grow their top line, and also to take cost out and to be more efficient and effective on the other hand. So on one platform, we give clients the best of both worlds, and I think that's driving a lot of our optimism as we look forward.
All right, Frank, let me ask you for a bit of insight into what we can expect in the forthcoming quarter, especially on the case of margins. It seems in your management con call that you did talk about flat pricing. So what will that mean for margins? What is the downside risk if we see matters in Europe deteriorate further and if we don't see more encouraging economic data coming in from the US?
Our current view is that as we look at margins for next quarter, we think that margins will be still within our target operating margin range of 19 to 20% on a non-GAAP basis. We think they'll be actually at the high end of that range in the fourth quarter. That's baked into our guidance. When we look at pricing this quarter was flat. That was as we expected it to be. In our pricing environment, we tend to get the price increases early part of the year, and as we came into this quarter, most of the price increases that we got in 2011 had been factored into our run rate. So there wasn't an incremental bias or upward bias in pricing in this quarter, in Q3 for 2011. As we look forward, we think that as we go into 2012, that there will be some clients where we will be able to take pricing up, and we'll work through that with our clients as we go through the current budget cycle that most of our clients are going through.
Right, you're talking about the pricing front of Frank. Also, going ahead, you recently had your annual clients meet. What's the verdict from them? Because, it's time that they will reevaluate their budgets in January. So what's the word coming in from clients?
Yeah, we just spent time in Europe doing our annual customer event, Cognizant Community. Over 200 clients and prospects registered for that event, and across the board in Europe and in other parts of the world, the message is very consistent. Our clients are telling us that as they go through their budget cycles, we don't see budgets, IT budgets and operations budgets increasing significantly next year, but what we do see is that clients are going to shift an increasing amount of their budgets to doing work with firms like Cognizant in a global delivery model. So we see the share shift of budgets going more to global delivery. And the reason for that is very simple. One is that this is a long-term secular trend, but also in the current economic environment, our clients want to protect their investments in strategic projects. They want to be able to invest for the long term. They want to be able to invest for growth. And so by using the lever of the global delivery model, they're able to save cost on the one hand and take those savings and reinvest them back into into strategic initiatives. And so we see that message coming through consistently, both with our clients in Europe, but also in other parts of the world.
Frank, thanks so much for joining us. We'll leave you at that. A confident Cognizant over there talking about the coming few quarters for the company.